All right, guys, it's Paul Singh, the Market Speculator. We're on day 12 of the Mastery of Swing Trading Challenge, and we're on day 3 of talking about volume. So we had the introduction about why volume is so important. Last time we talked about accumulation and distribution, how it really clues you in on what's being bought and sold by the big guys. And we use the Twitter example here. You can still see my notes on it. Today, we're talking about something very specific. That's not the big trends and when to get into a stock early because of the accumulation distribution patterns. But we're going to talk about volume on the day of a breakout. A lot of both day traders and swing traders are breakout traders. We like breakouts as swing traders because we want a catalyst. We want something that is going to propel the stock to move. As a swing trader, you're not looking to hold for a year or two. We are looking to get explosive gains in a short period of time, which can be anywhere from a few days. Sometimes I'm holding only for 2, 3, 4, 5 days. Sometimes it'll be a couple of weeks, even a couple of months. Anywhere between 2 days and say 3 months, we want to get a move during that period and profit from that. We don't want to sit and hold. And volume is the key to that. And on breakouts, what we want to see is explosive volume. And this explosive volume from that breakout can often lead to trends. So let's take a look at Twitter here, and you're going to notice, first of all, the stock had been doing very poorly for a long time. And when it started to actually do good was when it started to have these explosive high volume breakouts. And oftentimes there aren't earnings, but they can be on other types of news as well. But you can see here, it basically has run from 20 to almost 50, 47, 48 here. So it's made over 100% gain in a very short period of time. And the key to it has been volume on the breakout. So we've basically had here 1, 2, 3, 4, and 5 high volume breakouts within about 6 or 7 months. So I'm not counting this one here, but we'll say 6 months here. So, and we've seen the stock explode during that period. So these were clues here, these big high volume breaks. That's what we want to see when we break out trade. Now, breakouts that happen on low volume tell you there's not a lot of interest and they tend to fail. So we stay away from those when we're looking to trade a breakout. And Twitter is a good example here. We had the high volume break. Now you'll notice with a lot of these, a few of them ran right away. This one right here, the most recent one, ran right away here. But you'll notice that a lot of these might jump, and we can game these jumps, but they tend to pull back here, because so much happens on the day of the breakout. So when we get into our breakout trading, and that'll be later in the challenge, we'll have a couple of patterns we trade, and a lot of the patterns are based around pullbacks off these breakouts. So it doesn't necessarily mean it's going to run right away, but it has the buying interest, and we know eventually the thing is going to make a big move. So we want to see the high volume breakout. Now in the lesson here today, I use Netflix as an example, and we see the same thing. High volume breakout, high volume breakout, high volume breakout here, here, and here, and here. So 4 of them, and they all led to big moves. So these high volume breakouts are predictive of big runs. That's what we want to see. So I scan for high volume breakouts every single day. And if you look here, you'll see lists here. I have a breakout list here. I have a specific earnings breakout list here. So I have 2 lists here that are solely based on breakouts. And one of the requirements for these is it has to have explosive volume. So keep that in mind. And now for the challenge today, because remember, you're not just passively doing this. You want to be actively doing this and learning. I'm asking you to pick 10 different stocks. You can use the same ones you used in Challenge 11. Go back 2, 3, 4, 5 years and look at all the high volume breakouts and try to identify some patterns you've seen, see the ones that fail. What were some commonalities between the ones that ran and the ones that failed? And annotate the charts. Mark them as high volume breakouts. identify what you're noticing. And as you study these things, without even me going over it, I am going to go over it in future lessons, but you're already going to get a good feel on your own without anybody telling you on how these things move and how you should be trading them. So that is the lesson for today. And then the next day 13 exercise, which should be coming in a couple of days here, will be another volume based lesson. We've got 2 or 3 more of those before we move on to the next topic.